The trading strategies that actually make money are stupidly simple, while the strategies that blow accounts are the complicated ones. The reason? Complex strategies literally break your brain. Ever tried running Photoshop, 50 Chrome tabs, and a game all at once on an old laptop? Your brain runs out of RAM when you're executing your complex strategy. That's not a metaphor. That's literally what's happening. Your brain has a processing limit, and complex strategies blow right past it. When that happens, our ability to execute doesn't just get harder, it collapses entirely. Simple strategies win for one reason. Your brain can actually operate them when it counts. Let me show you what's going on inside your head when you trade a complex strategy. A setup appears on your chart. Now the checklist starts. Check RSI, volume, FVGs, higher time frame structure, order flow, and time of day. That's 6 different things your brain needs to evaluate simultaneously. While price is moving, your heart rate is up, and you're aware that real money is at stake. Each one of those is a separate mental task competing for the same limited brain power. Think of it like trying to have 6 different conversations at the same time. You might catch fragments of each, but you're not really processing any of them well. That's what your brain is doing when you trade complexity. And this is the interesting part. When your brain gets overloaded like this, it doesn't just slow down. It starts breaking in very specific, very predictable ways. The first thing that breaks is your ability to execute. With a simple strategy, price breaks above resistance with strong volume. You see it and you know what to do. Clear signal. No questions. But with a complex strategy, you freeze. Did RSI really show divergence? Or was that just a small fluctuation? Is this volume spike significant enough? Does the higher time frame confirm your trade, or does it just not contradict it? Suddenly, you can't pull the trigger. Not because you're scared, because you're not sure if you checked everything correctly. You stare at the setup. You know you should enter, but there's this nagging feeling that maybe you missed something. Maybe one of those 10 conditions isn't quite right. Maybe if you just look one more time, and while you're hesitating, the setup moves without you. Again, this is hesitation born from cognitive overload. Your brain is juggling so many variables that it can't commit to a decision. It keeps second-guessing, keeps rechecking, keeps looking for certainty that will never come. With a simple strategy, there's nothing to hesitate about. Did price break above resistance? Yes or no? That's objective. That's clean. You either take the trade or you don't, but at least you're decisive. But ask yourself to verify 10 different conditions while price is moving. Your brain locks up, trying to be certain about everything. And hesitation becomes your default state. You're not executing rules. You're trapped in analysis paralysis. And paralysis is execution poison. Here's where it gets even more interesting. That hesitation starts doing something sneaky to your rules. Let's say you have a rule. RSI should be between 40 and 60. Clear enough, right? But now RSI is sitting at 62. Your brain immediately starts negotiating. Well, 62 is pretty close to 60. And if you squint at the chart, it might tick back down. Plus, this setup looks really good otherwise. Maybe the RSI rule is more of a guideline than a hard rule. Every rule with numbers or levels creates wiggle room. And when your brain is overloaded and looking for shortcuts, it will absolutely use that wiggle room to justify whatever your emotions want. Want to take the trade? 62 is basically 60, close enough. Don't want to take it? 62 clearly violates the parameters. The more rules you have, the more negotiations your brain can have with itself. The more negotiations, the more rules you'll break. Not because you lack discipline, but because your overloaded brain is trying to reduce the mental strain any way it can. Simple strategies cut through this completely. Price broke resistance or it didn't. There's nothing to negotiate. Now here's something most traders never connect. All of this creates stress, and not the good kind. There's useful stress, the alertness that comes from having money at risk. That actually sharpens your focus. But then there's the stress of trying to juggle 8 variables while making time-sensitive decisions. The stress of constantly worrying you forgot to check something. The stress of hesitating on every setup because you're never quite certain. That kind of stress doesn't sharpen you. It degrades you. And here's the thing about stress and cognitive load. They feed each other. The more you have to process, the more stressed you become. The more stressed you become, the worse you process information. It's a feedback loop that spirals fast. Studies on performance under stress show that when people are overwhelmed, they start missing obvious information. They make worse decisions. They default to emotional reactions instead of logical ones. Your complex strategy isn't just asking a lot of your brain. It's actively sabotaging your ability to think clearly. But we're not done yet, because when cognitive load gets really high, something shifts at a neurological level. Your brain has two key players in decision-making. The prefrontal cortex, that's your logic center. Planning, impulse control, rational thinking. That's what you need to follow your trading rules. Then there's the amygdala, your emotional center. Fear, excitement, impulse, reaction. When your brain gets overloaded, your prefrontal cortex starts shutting down. It literally runs out of processing power. Meanwhile, your amygdala stays fully active. Actually becomes more active because it perceives the overload as a threat. So complex strategies don't just make trading harder. They literally make you more emotional. It's not a willpower thing. It's neuroscience. You're trying to be disciplined and follow rules using the exact part of your brain that complexity has already disabled. That's why you know what to do, but can't make yourself do it. And this is where everything falls apart. Because when your logical brain is offline and your emotional brain is driving, you tilt. Tilt isn't a personality flaw. It's not about being weak-minded. It's just what happens when your mental load exceeds your capacity to handle it. Think about where you are at this point. You're already operating near your cognitive limit just to evaluate setups. Your brain is strained before you even enter a trade, and you take a loss. Now you need to process the emotional impact of losing money. You need to review whether you followed all your rules correctly. You need to wonder if you missed something. You need to evaluate the next setup. You need to stay calm and objective. Your brain does not have capacity for all of that. Something has to give. And what gives is your ability to follow your plan. Suddenly, you're revenge trading. You're chasing entries you know you shouldn't. You're skipping your stop loss. You're sizing up too big. Not because you don't know better, because your brain has exceeded its operating limits. Let me paint you a picture of how this plays out in real time. You're trading a 3-rule system. Setup 1 appears. You evaluate it, execute it. Setup 2, same thing. Setup 3, 4, 5. Your brain isn't even breathing hard. You could do this all session. Now trade a 6-rule system. Setup 1. You carefully verify every condition. Execute the trade. You already feel a bit of mental fatigue. Setup 2. You check most things, but you're rushing through a couple of the confirmations. Still mostly following your process. By setup 4, you barely glance at your conditions. You just take the trade because you're exhausted from the decision-making process. This is decision fatigue in action. Your brain has a limited supply of high-quality decisions per day. Complex strategies burn through that supply in an hour. Simple strategies preserve it. Every time you add a rule, you think you're making your strategy better, more sophisticated, more professional, like you're leveling up. What you're actually doing is making it impossible for your brain to execute. You're not creating a better strategy. You're creating a better excuse for why you can't follow it. Because execution isn't about knowing what to do. Anyone can learn rules. Execution is about being able to do the right thing consistently when you're stressed, uncertain, tired, emotional, or on a 3-trade losing streak. And you cannot do that if evaluating one setup maxes your cognitive capacity. This is exactly why simple strategies work. When your strategy has 3 clear rules, decision-making is fast. You spot the setup. You evaluate it in 10 seconds. You execute. No mental gymnastics. No stress. That clarity creates consistency. You're not second-guessing because there's nothing to second-guess. Price either broke resistance with volume or it didn't. That's a fact, not an interpretation. You take every valid setup because you're not exhausted. You follow every rule because you're not overwhelmed. You trust your system because you can actually operate it. And consistency is what creates results. Not perfect predictions, not complex analysis. Just doing the same simple thing over and over without your brain falling apart. There's no hesitation in simplicity. No room for your emotions to negotiate with your rules. No mental fatigue after 5 setups. No stress from trying to hold 9 variables in your head. Your brain operates comfortably within its limits, which means the part that handles discipline and impulse control stays online, which means you can actually be the disciplined trader you're trying to be. The discipline was always there. Complexity was just suffocating it. Let me show you how this plays out over time, because this is where it really becomes obvious. Week 1 with a complex strategy, you're excited, engaged. You're carefully checking every rule, but you're also exhausted after every session. You can feel the mental weight of it. Week 2, you start cutting corners. I'll skip this confirmation, probably fine. The strategy is just too demanding to execute perfectly every time. Week 3, you're barely following the rules anymore. You've unconsciously simplified it down to whatever you can actually handle in real time, which means you're not even trading your strategy at that point. Now week 1, with a simple strategy, you're bored. It feels too easy. You keep wanting to add more, but you're executing it perfectly. Every setup, every rule, zero strain. Week 2, still kind of bored. Still executing perfectly. You notice you haven't tilted once. That's weird. Week 3, you're profitable. Not because the strategy is magic, because you've executed it consistently enough for whatever edge it has to actually show up in your results. The complex strategy never got that chance. It broke your brain before the edge had time to work. Here's the thing for most traders. They already know enough to be profitable. Every concept you understand, every strategy you've learned, that's sufficient. More than sufficient. The problem has never been knowledge. It's execution under pressure. And execution collapses when cognitive load is too high. Every extra indicator you add, every additional confirmation you require, every new condition you layer on, you think it's making you better. It's actually just making it harder for your brain to function when it matters most. You're not building a better strategy. You're building a barrier between you and consistent execution. Think about it this way. Your brain has a cognitive budget for each trading session. Let's call it 100 units. Every decision costs units. Every condition you check costs units. Every variable you monitor costs units. A complex strategy might cost 80 units per trade evaluation. You can handle 2 setups before you're cognitively bankrupt. After that, you start making mistakes. A simple strategy costs maybe 15 units per trade. You can evaluate 6 or 7 setups before you even start feeling mental fatigue. Who do you think performs better over a session? The trader who's mentally exhausted after 2 trades? Or the one who's still sharp after 6? It's not even close. Here's your practical takeaway from all of this. Stop asking, will this make my strategy better? Instead, start asking, will this make execution harder? Every time you think about adding an indicator, a rule, a confirmation, the question isn't whether it might improve your win rate by 2%. The question is whether that 2% theoretical improvement will increase your cognitive load so much that you can't execute the other 98% of your strategy properly. Because I promise you, that 2% boost in theoretical edge will become a 20% decline in actual execution. And execution is everything. The best strategy in the world is completely worthless if your brain can't operate it under pressure. Profitable traders know it's important to operate within their cognitive limits. They've designed their trading around what their brain can actually handle in real time, under stress, with real money on the line. They're not trying to be superhuman. They're being strategically simple. They understand the goal isn't perfect analysis. It's consistent execution. And consistent execution requires mental space. Space to think clearly. Space to process emotions without being overwhelmed. Space to choose the right action instead of the emotionally easy action. So here's what to do. Take your current strategy. Cut it in half. Then cut that in half. Keep cutting until you have 3 rules maximum. Those rules should be simple enough to teach someone in 3 minutes. Clear enough to execute when you're tired. Straightforward enough that there's no room for interpretation. Then trade that system. Not for a week. For 3 months minimum. And just watch what happens. You'll feel calmer during trading. You'll tilt way less. You'll execute more consistently. Your results will improve. Not because the strategy is better at predicting price, because your brain can actually operate it without falling apart. The bottom line is this. Complex strategies break your brain before the strategy itself ever gets a chance to fail. They create cognitive overload, which causes hesitation to become your default state, rules to become negotiable, stress to compound, emotions to override logic, and tilt to become inevitable. Simple strategies win because they preserve your brain's ability to execute. That's it. That's the whole reason. Your brain is the limiting factor in your trading. Not your strategy, not your knowledge, not your discipline. Your brain's capacity to process information under pressure. Once you actually accept that, everything changes. You stop searching for better strategies. You start searching for strategies you can actually operate when it counts. And that's when you finally start making real progress.